Hello, good day. I hope you're doing great. I'm here with you for the daily Ethereum analysis on February 11th. We're on the weekly time frame. As you can see, in the past week up to today, Ethereum has experienced more than a 7% price drop, and the price is moving within the monthly and weekly FVG. Last week, with a wick, this area filled the liquidity gap. In this time frame, the strong support we can expect for Ethereum is the key level of $1,750, and ultimately the weekly order block at $1,694. We're now on the daily time frame. We can see that after a strong reaction to the $1,750 level, the price started a good upward movement. However, this upward movement couldn't lead to a continued long-term uptrend, and in recent days, after some doji and weak candles, we've seen the start of a downward move. This downward movement has occurred along with liquidity being taken from the lows, and the market is now trading in the discount area. As long as the price remains below the last daily order block, the dominant scenario will be continued bearish pressure and targeting lower liquidity. In this chart, we can see the inflow and outflow of liquidity into Ethereum ETF funds, which has been positive and inflowing in recent days. However, this positive amount is very insignificant compared to the outflows we saw last week, so we can't expect a strong upward move in the price. Let's analyze the chart on the 4-hour time frame. We can see that over the past 4 days, the price has been fluctuating between the $2,000 and $2,135 range. Finally, in the most recent candle, it broke out of this area, filled the FVG at the $1,955 level, and is currently reacting to the lower boundary of this FVG. By examining Ethereum's liquidity map, we can see that there is a significant amount of liquidity accumulated above the previous highs at the $2,150 price level, which means the price could have a strong reaction as it moves to collect this liquidity. Regarding the sell-side liquidity, there is a high amount of liquidity at the $1,900 price level. By examining this area, we can see that there is a 1-hour FVG on the chart at this price, and we can expect the price to fill it. In the 1-hour time frame, we can see that the price was moving within a descending channel. This channel was broken to the upside, but this breakout did not signal the start of a bullish move. After some fluctuation in this range, the price has now exited this area to the downside again. We can once more consider that it intends to continue its main downward trend, and during price corrections and returns to liquidity zones such as the FVG around $1,989, or if we see a deeper correction to the price range of $2,061, we can enter sell trades targeting lower levels such as the previously mentioned liquidity at $1,900, or even the previous low. Wishing you success and profitable trades.